Okay, I think we'll crack on then. So good morning, everyone. Welcome to the next webinar in our series Going Global with Giant Group. Focus today is on the US. I'm very pleased to be joined by Steve Lovig from Flex HR. Morning, Steve.
Good morning, Charles. Thanks for having me this morning.
No problem at all. I guess when we started our international expansion, we spoke with our current clients about which countries were on their horizon. And the US was really at the top of the list for
Okay.
many of the agencies that we spoke with. And so it became one of the first countries that we looked to develop. We're up and running now, and Steve and Flex HR have really assisted us with getting all of our processes set up over in the US. So before we jump into the content, Steve, could you give us a quick kind of summary of Flex HR and what you guys do?
Sure. Let me start with myself. My profile says I'm an award-winning HR executive, former adjunct professor, writer, and podcast host. What I can tell you is my background includes more than 25 years expertise in human capital management, employee relations. That's the hard stuff where you have to terminate people sometimes, rewards and recognition, the fun stuff, and overall performance. And, Charles, over the years, I've prided myself in being a trusted advisor to the C-suite, a coach to managers, and an advocate for employees. I started my C2C partnership, and we'll define that here in a couple of minutes, with Flex HR last July as one of their senior strategic human resources consultants. So Flex HR, I'll share a little bit about what we provide to organizations. As about a 25-year-old business, Flex HR provides companies with human resources consulting, payroll processing, compliance, training and development, leave management, and total HR outsourcing, if that's what the business needs. It's truly in our name, and it truly is what we are, very flexible with what we provide from an HR perspective based on the client's needs. So, handling the human side, Charles, is one of the most intricate business functions, and just most organizations don't have the resources to resolve those concerns on their own. That's why Flex HR can step in, customize the service to your company's specific needs, and really partnering with Flex HR and me saves the company time, money, and hopefully you can say you agree with this, Charles, saving you headaches as well.
Absolutely, 100%. Yes. I think
Good,
my
good.
head would explode if I had to keep all of the information in it that you guys hold for us.
It's
Excellent. So Betty, could we just move on to the next slide? So today we'll kind of just cover a few areas around, I guess, the journey that we went on setting up in the US, and how Flex HR assisted us in that process.
Sure.
But I thought no better place to start than at the beginning. So, Steve, if you could run through what are the different types of company incorporation that are actually available in the US?
Sure. So 3 types of incorporation in the US: LLC, S corporations, and C corporations. And LLCs and S corps have a lot of similarities. I'll talk about the C corp in a minute. But the owner of an LLC and an S corp would be personally responsible for the business debts. So both the LLC and the S corps are pass-through tax entities, and that simply means that there are no income taxes paid at the business level. The business profit or loss is passed through to the owner's personal tax returns and then just paid at the individual level. Another similarity: both LLCs and S corps are subject to certain responsibilities imposed by the state where you're incorporated, like having a registered agent, filing annual reports, paying annual fees. C corps, S corps, and LLCs all offer different types of tax advantages, tax deductions that would not be available if you were a sole proprietor. So some sort of incorporation would probably make sense, Charles. And I'll add this note: capital can be raised more easily with a C Corp. So I would say look at your business based on activities, growth, capital needs, etc. Knowing those expectations then will help you determine which corporation type is best for you.
Yeah. Okay. Interesting. That's good to know. And then I guess the other thing that we've talked about in the past is, and so where do you incorporate your company? I think when we were starting out, because we were ultimately doing it from the UK, the advice we got was Delaware was the place to go. We asked around a few people who had done it themselves, and we asked some advisors, and that seemed to be the right spot for us. But any insights you could give into where might be best for people to look at?
I suspect if you ask 3 or 4 people and you do a Google search, you'll find Delaware pops up more than other states. But what you need to do is create an entity within a U.S. state. And as we suggested to Charles, choosing a state, you've got to have a physical address. But a lot of clients routinely select Delaware. Either way, you'll need to have a street address in the U.S. But one of the reasons Delaware is so popular as a corporation state, they have a general corporation law that is the most advanced and flexible business formation statute in the nation. They really want to work with you. They provide prompt, friendly service. I've dealt with them. Plus, Delaware doesn't have any state sales taxes.
Okay.
Charles, I wanted
That's
to
always
mention,
nice.
yeah. Wanted to mention one other thing about setting up and running payroll. You're going to need a U.S. bank account to do that. So street address to incorporate a bank account to run payroll. And what we found, the easiest way to open a U.S. bank account from another country is to use an international bank with a subsidiary in the U.S. For example, if you bank with JP Morgan Chase in your country, connecting with them would be an easy way to set up a U.S. bank account. You need to set up an employer ID number. That's done with the U.S. Internal Revenue Service, the IRS. It's real simple. You can use their website, Google irs.gov, look under small businesses. All of the information is there. You can do it right there online. Process is really quick. It's free. The only catch is that whoever's applying online is applying themselves, and they must have a valid taxpayer ID number, like a U.S. Social Security number, something like that.
Okay, so you need to kind of have someone in country then to, I guess, to get that number.
Yes. Yeah. Or dual citizen. So, right.
Okay, perfect. And Betty, if we can move on to the next one, next slide, please. So I was thinking now, let's make the assumption we're in country. We've got our business. We're set up. We're incorporated, and we're going to hire our first member of staff. So what are the main areas that we need to think about when we start to actually employ in the US?
So you want to think about some of the ways you want to work with those individuals and how you're going to pay those people for their time. The U.S. has really 2 main types of workers. Most workers are employees of a company where they perform their jobs. That means the employer is responsible for directing the type and amount of work that's done, and when needed, guiding the individual if any performance problems occur. In the U.S., we know these people as W-2 employees. The W-2 comes from the tax filing form. Beyond that, the company, if you are hiring employees, W-2 employees, the company's more than likely, depending on the size, going to have to provide health care, retirement plans. You'll hear the term 401k. That's our federal retirement plan. There are other state-regulated retirement plans. For example, in California, we'll talk a lot about California this morning, I think. Plus, we're seeing, Charles, more and more paid sick leave and family leave laws. being written into law, and other types of paid time off, withholding of various taxes from the employee's paycheck is required by the business, and then of course paying them for all the hours worked. And while W-2 employees typically work for the same company for several years, if and when they do leave, you might have to pay for their unemployment compensation. So you pay for them when they're an employee, and then it's not a severance pay, but there is some unemployment compensation after they leave. You're paying into that in the state as part of the taxes that the business pays to have those employees. And then,
so employer costs, as we call it over here in the UK.
Employer cost. And there are a lot of them. In the US, we have federal law requiring most employers to pay those W-2 employees at least a federal minimum wage for every hour worked, plus overtime premium pay. That's 50% more than their regular hourly rate. That kicks in for every hour worked over 40 in a work week. And you say, okay, I got that, Steve, locked in. Well, some states and even certain cities require an even higher minimum wage be paid. For example, I'm going to talk about California. It could be the most expensive state to do business in. Charles, the federal minimum wage is $7.25 an hour. In California, the state minimum wage is $16 an hour. And at least one city in the state requires employers to pay every single individual W-2 employee at least $16.85 an hour. Yeah. Additionally, in California,
so not just federal, you've got to think about state as well.
State and city. Not only do employers have to pay the overtime premium after 40 hours worked in a week, in California, you have to pay the premium anytime an employee works more than 8 hours in one day. If the employee works more than 10 hours in one day, you have to pay them double their hourly rate. Now you're talking $33, $34 an hour. And there's even a premium pay requirement for employees working a 7-day in a row schedule. So it can get expensive, and it's why you want a company like Flex HR to be looking at these things for you. I could mention some of the other states that you might want to stay away from.
For sure, I was going to say not just expensive, but complicated as well, with 50 different states plus cities and variations across them all.
Absolutely. Some of the states with higher minimum wages include, we talked about California, but I'll start with Arizona, $14.35 an hour, Colorado, $14.42, Maryland, Massachusetts, and New York State all at $15 an hour. And those are all almost double the federal minimum wage. There are a few cities inside New York State that have a minimum wage as high as $16 an hour. Connecticut's minimum hourly wage is $15.65, Washington State, $16.28, and the highest state, although it's not officially a state yet, is Washington, D.C. at $16.50 an hour. So if you kind of keep those in mind, in the northeastern part primarily of the United States, those states are the ones with the highest hourly wages required for W-2 employees.
Okay, that's interesting. And I guess that actually leads in a little bit to our next slide, because ultimately in our world at Giant, we work with contingent labor. So when we're talking about, often to our clients, about pay rates, they might come to us with a pay rate. But like you just talked about, what we'll need to think about is, okay, what's the minimum wage for a particular state or city? And then what are the employment costs on top of that? Yeah. And then often we go back and then talk about an all-in rate for someone that maybe then encompasses the federal taxes, the state taxes, but we've also got to think about making sure we stay above those minimum wages as well. And there's, I guess, a big enough pot of money to cover it all.
Make it worthwhile.
But I think with contingent workers, you know, W-2, as you mentioned, is the employed option, but there are some other options in the US as well, aren't there? Could we talk about that just for a second?
Sure. One of the other types, known as typically an independent contractor, we might refer to it as a 1099 contractor. And again, that's a tax term. The 1099 is the form that's used for that tax reporting. So when you bring in a 1099 contractor to perform services for you, unlike a W-2 employee, they're not your employee according to federal law. They come in with a partnership with you. They bring a set of agreed to expectations. Here's a job I'm going to do for you. Here's how I'm going to do it. Here's the timeline for completion of a project, for example. With a 1099 independent contractor, to contrast it to a W-2 employee that we just talked about, Charles, the company is not responsible for and should not be directing the type of work or amount of work that's done, nor should the company correct the individual when performance problems occur. It may sound a little off-putting, but really, instead of working with a W-2 employee to encourage them and correct them and set them on the right path, because they're going to be with you a long time, a 1099 contractor that's not doing what you need from them can simply be terminated by terminating the agreement. Typically written in there that it has to be in an agreement, has to be in writing to terminate somebody, that sort of thing. But it's a simple, okay, you're not doing what we need you to do, and we're going to end the agreement. Another plus.
So I was going to say, so very much that they are truly independent then in the work that they're doing for you. It's kind of, you've hired someone with a skill set and you're letting them just get on with that work.
Sure. Their structure, you and the company and the contractor agree what's needed to be done. You see this 1099 contractor a lot with technology. They've got such a specific skill set. There's a project that it's an implementation of a new piece of software, that sort of thing. They'll come in, do that work for you, and when that work is finished, then the partnership is dissolved. When another plus with that is when you have those independent contractors, you're not having to provide health care, retirement, paid sick leave, or family leave, any type of paid time off. Also, when they do exit, there's no unemployment compensation. But,
right.
And Charles, I think we've had this conversation with you at Giant. You want to be cautious about saying, we'll just bring in a bunch of 1099 contractors. The IRS has an extensive list of requirements to determine whether a worker qualifies as a 1099 contractor or is in fact a W-2 employee and therefore has to be given those other benefits. And like you said, there's a lot of intricacies there. It's a place where an experienced HR professional can be invaluable. It'll save you time, money. It'll keep you away from IRS audits and the resulting fines. So most companies in the US will hire their people to be W-2 employees, but you do have the option. And then one other is the corporation to corporation or corp to corp worker. You'll see it abbreviated as C to C. They are truly independent contractors that he or herself are typically incorporated. They usually engage in business on a project-based contract. And again, they've got their own company, their own incorporation. That's my personal status. I have an LLC that I started, and that is really the partnership that I have with Flex HR.
Okay, and so could that be an LLC or an S Corp or a C Corp?
It could, yes. Any of the three could be, yes.
Okay,
great question.
And is there any more or less risk engaging a C to C as opposed to a 1099, or should you still do all of the same checks and that you would do for a 1099? Should you do the same for a C2C?
You'd want to do all of the same checks. I was looking at it last night as my eyes were glazing over. There are 6 specific points that have to be met. All 6 of them have to be met according to the IRS in order to say that someone's a 1099 employee versus a W-2. It's a little easier to say I'm bringing on a C2C worker if they do in fact have their own LLC or S Corp, something like that. But you still have to be careful how you treat those individuals once they become part of your workforce.
Okay. And just one other thing that just occurred to me actually to mention or to ask rather is when we're obviously employing someone on a W-2, they fall under our workers' compensation insurance. If we're engaging with a 1099 or a corp to corp, do they then hold their own workers' comp insurance?
They are required to hold their own, not necessarily a 1099 contractor, but certainly a corp to corp worker, excuse me. They would be required to have their own insurance like that, EO insurance.
Perfect. Okay. And so going to move on to the next slide, and we kind of touched on this a little bit already in the fact that yes, there are 50 states, and then you have cities, counties, regions. They all have, I guess, the ability to create their own laws and regulations. But what are some of the recent changes you could maybe share with us? A few of the quirks in different states that have been coming up recently that would be good to know about.
Great question. Since these laws are popping up all across the U.S., we just learned of a new requirement out of California a couple of weeks ago. It requires annual workplace violence prevention training. And despite it being a new law that was just presented to the public, it goes into effect this May. And there's all kinds of little, buts, you've got to do this. You've got to include an X number of employees in the creation of it. You've got to create a panel of employees to approve it. So a lot that goes into that. And we've got 3 months to put it all together for California. That training is in addition to California state required sexual harassment prevention training for all employees. But I don't want to beat California to death here. It's a beautiful place to visit. But I just finished a huge project that's due each year, required hours of data gathering and reporting back to the state about payroll equalities across gender, ethnicity, and nationalities. There also have been a group of leave laws that are new this year as of January. 14 states, including, no surprise, California. Also Colorado, Connecticut, Delaware, Hawaii, Maine, Maryland, Massachusetts, Minnesota. Minnesota. I've got to read these because there's 14. New Jersey, New York, Oregon, Puerto Rico, which is not a state, but we still have to follow their employment regulations. Rhode Island, Washington, D.C., all of those mandate paid leave for an employee's health condition or disability. And then employers in Washington, California, and Rhode Island are now requiring employers to disclose a wage scale or a salary range whenever you're posting a job. So whether it's internal or external using job boards, like Indeed.com or LinkedIn, you've got to make sure you post a salary range. And again, it's difficult to keep up with all these rules and regulations because they change frequently. Here in the States, they change at various times of the year too. It's not all waiting until January 1st to increase their minimum wage requirements. For example, Florida's minimum wage changes every September. So again, good idea to partner with a knowledgeable HR professional, a good HR consulting outsourcing firm like Flex HR, because truly we keep up with this stuff. and we'll help you get back to focusing on your business, and we'll provide the leadership, the expertise to the company.
Excellent. When it comes to things like the training that you mentioned out in California, is that something that is generally can be delivered online, or is it a situation where you have to literally come together and people sit in a room and have almost like a mediator delivering the training?
Yeah. Another good question. And the answer, like so much of human resources, is it depends. In California, the sexual harassment prevention training can be done online. And in fact, the state provides the online training for you at no cost. But this new training coming down, the workplace violence prevention, at least more than 50% of it has to be done in person, live, face to face with somebody.
Wow. And is that the sort of service that you would then also provide to actually deliver that training?
Absolutely. I can personally, Flex HR as an organization can do that. We've got training specialists. We've got a partnership with a virtual training platform that has something like 3,000 different training sections and videos. And we could also create things that are needed specifically for one organization or one state that maybe we haven't been in yet. Yeah.
Okay. Fantastic. So look, I'm just checking the time, and we're almost at our half hour. And I said to you earlier, it would go quick once we get started.
Yes.
And I know I massively overran on the last webinar, so we'll go on to the final slide if that's okay. What I always try to do is just finish by perhaps trying to provide sort of one key takeaway.
Sure.
For the people that have been with us on the webinar. So if there was one piece of advice you could provide to someone who's looking to expand into the US, what would that be?
I would say pay close attention to which state and even which city your business is going to be focused in, and where your employees work from, because even if your company is headquartered in Georgia, by the way, which has a $7.25 an hour minimum wage, if you hire a remote worker that lives in San Diego, California, guess what? You're now required to provide that city's minimum wage rate, $16.85 an hour, various types of paid leave, healthcare, retirement, and to follow all the other city and state mandated regulations. And I know a lot of organizations in the US, certainly I can speak to, have a lot of remote workers where they work from home. They don't go into your office. So despite the headquarters being in one place, you've got to pay and relate to the worker's home address when it comes to wages and other perks. And I would leave you with kind of what we've hinted here, Charles. Consider finding local partners and advisors to help navigate the new market you're looking into, just as you're doing today. Look to people like Giant Global and their worldwide knowledge, Flex HR's team of senior human resources for U.S. expertise, insights, guidance, and a hand to hold you as you work through these challenges.
Absolutely, and if at all possible, avoid California. It sounds when it comes to it, having to employ people.
There are other states almost as bad, but California is an expensive state to do business in. Yeah,
for sure. Well, look, Steve, thank you so much for your time.
Sure.
We're just on the half hour now, so I think we'll wrap it up for today. We'll check through the comments section, see what questions came in whilst we were on, and we'll get back to everybody via email to answer any questions that are in there. Please do, everyone who's tuned in today, keep an eye out for forthcoming webinars. I think there is one on Benelux coming up in a few weeks' time, and obviously we'll be promoting that. And if those are countries that you're interested in, hopefully there'll be some interesting content for you there. But Steve, once again, thanks so much for your time today. Really appreciate that.
Yeah, thanks for having me. I enjoyed talking about U.S. law.
Fantastic. Cheers for now. Thanks, everybody. Bye-bye.
Bye.